What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. Before we get started, don't forget to check out the description. There's links to the Discord, links to the socials, links to areas that I'm hanging out during trading hours, as well as the merchandise shop and other ways you can support the Rawstocks channel. Also, we're getting pretty close to getting 500 subscribers. We're only 150 subscribers away, so don't forget to smash a like, subscribe, share with all your friends. Really eager to give away some Rawstocks merchandise when we start to hit those 500, 1,000, and 5,000 subscriber levels. So let's jump into the charts now. I got a couple different charts for you guys and a couple different layouts. So we're going to look at the chart layout that we've been watching throughout this last week or two with our consolidation levels on the daily time frame. Right, we saw that trade down 226 and some change. We saw a strong rally from there inside of our consolidation zone. We got our parallel channel. We've been right in the channel with our candle, our wicks coming down below, but our candle body's closing above on that median of that bullish channel. And now we had a breakout candle that broke above the high of this breakdown candle, above the open of that breakdown candle. Also took the internal liquidity that was inside of this wick, and we ran a test of this top candle as well. Ultimately, we closed below it, but we did get our wick above it. So it was running a test. Something I want to note is that this move right here came back into optimal trade entry. So if you were looking to short the market, we are around a really key opportunity to short the market on a more long-term time frame and see with your stop loss being back above this old high, it would be considered a low-risk entry, right? And the reason that those are low-risk entries is because if you use your Fibonacci tool, I'm not saying that the market is bearish or bullish necessarily, but you can see we closed right around that 70.5 level. And so if you were to use your short position tool and you were to say enter on that fib level and you set your stop loss right above the old high and you targeted at least the 0 fib, you got a 2-to-1 risk reward ratio, right? That'd be just targeting the old low. If you targeted the entire symmetrical swing, which would also take us down to sell side liquidity, ultimately it would be breaking this bullish channel support, but that'd be a 5-to-1 risk reward ratio. So that'd be a pretty good trade if it went full symmetrical swing. Sometimes it does, sometimes it doesn't. If we see smart money reversals, you definitely can see those play out. If we go back and look at, say, this low and high here, I know it didn't quite get to 70.1 or 70.5, but we did get all the way to the 0.62 Fibonacci, did not get to the full symmetrical swing, which would be at 258.69. But, you know, let's look at the risk reward if you would have taken that trade in that direction and see what we ended up getting. Okay, so again, we're setting our fib level. We're just, because we know where it goes, we're going to set it there. But if we set our stop just below the low of that and to where price ended up going, it was a 3-to-1 risk reward ratio. So nice trade there. So again, what you're risking to take the short here in this optimal trade, with this being the target high, it's a lower risk for what your reward would be. Now, I'm not saying that that's the greatest trade because we are in the upper quadrant of this parallel channel and we do have resistance, two different resistance. We have our downtrend resistance and we have our channel uptrend resistance as well. And so we do have some targets to the upside that aren't too far away, as well as liquidity in this wick, as well as this symmetrical swing playing out to 258.69. So not saying this is a great short entry, but we are right there at optimal trade. So if you did, if you were bearish on the market, you were looking to go short on a longer term time frame, this would be the opportunity to get in with the lowest risk. You never know if we're going to push up and get a better entry if you're trying to go short. But again, we could also push up higher, and that's always the risk you run. Other things we're looking at here again is that we're in the upper quadrant. We have our previous day high coming in at 243.50 basically. We have buy side liquidity at 246.66. We have our channels. We have our daily volume node point of control that we've been watching around the 253 area. It might have changed a little bit, but I don't think it has. We won't go ahead and measure it off today. We'll do that, you know, kind of once a week, but I'm pretty sure it's right around that 253 range still. We also have a fair value gap on a different time frame down here that could pull price down, but we might see that push higher and then pull price down into that fair value gap. We didn't quite close this gap here, but we did trade into the volume imbalance in between these wicks. And again, there was a support level that held right there. So we'll be watching tomorrow to see if price goes up or down. Again, what those would look like is potential move higher. Could be one day, could be by Friday. We'd be looking for that, the trend line intersectionality there, and possibly the daily volume point of control. And then we might come back down and test that, and then maybe even come up higher and take out that 15-minute unbalanced price range. So that could be over the next week or two that we see something like that, and we just continue to ride the upper quadrant. Now, if we were to break down and we were to take out this boundary and close below it, we'd be looking at something like this, right? And then we'd potentially come down and test that support level, maybe into the fair value gap, maybe the trend support gets us, maybe just back into this quadrant, maybe just swiping this low here before we might head higher than that. I do think, and I posted some analysis on the Discord, I do think we are heading much higher. I do like the structure on the daily that this is providing us. And I do think we might come back and test this trend line again sometime soon. And then see a push higher. I do look at our push going above 300, up to 350, up to 400. But time's going to be your friend on that one. I don't expect we're just going to do a face rip and rally all the way up to there. But I did post some analysis on a more longer term time frame. And you can find that in the Discord. Links in the description below. Those are using smart money concepts as far as how I'm projecting that and the structure I'm looking at. As far as why I think it's going to go take that 300 level and go higher than that. Now, let's look at the 4-hour chart. On the 4-hour chart, we have a little different chart setup. This is something I've been playing with. It's premium discount theory, smart money concepts, basically price moving back and forth between premium and discount, typically coming from, in this case, discount up to premium and then back to equilibrium. And what you see here is that we have a fair value gap right around equilibrium. So price comes up, changes character right here in this candle, takes liquidity, comes back down to equilibrium, right below, back into discount, but to equilibrium, into a fair value gap. Okay, price goes up, break of structure here. We have a nice buy-side imbalance, sell-side inefficiency in this candle right here, leaving a nice bullish fair value gap as well, right? Break structure. Head up towards liquidity, fail to deliver on this bearish fair value gap. Okay, come back down again into a fair value gap. We traded through it, but we never closed it. Okay, and then we've rallied off of that fair value gap. It did come down right to equilibrium. I was actually looking for price to come back down here, and that's why I was playing shorts, because I did think we were going to come back down, break this, not just test it, but break this break a structure and trade through it, and then I thought we'd rally from there. So it's kind of why I've been playing the short side, because I did expect this this trade down into this fair value gap, where then I thought we would rally. But what happened is we only came back down to this one. We ended up in this candle here. This is a mitigation block. Okay, it came right down to where our break of structure was. That break of structure held us. A mitigation block. Okay, and then we've kind of rallied off that fair value gap since. Now we could expect that we might be heading into this fair value gap. If we do get above equilibrium here, then we'll be into premium price. And I do have a projected target of 257.26 on this chart, 220 or 268.89 being liquidity targets. We've already kind of taken out the sell side imbalance, buy side inefficiency, displacement candles. The only one left we got is this fair value gap. So the fact that we failed to deliver here and we've come back down could tell me, especially with this bullish displacement candle, that we might be heading into this fair value gap first, which would put us in that 250 range. Again, 253 would be that volume node point and control that we saw on the other chart. So not incredibly sure when that's going to happen, but I do think that that's likely. And we could just see it here. We got a little bit of a bull flag. Okay, and then we could see us pop into that fair value gap and then maybe see a reaction that brings us further back down. But it doesn't have to. It could just continue up into premium price. Okay, and if it did, It could go all the way to premium price, taking out these targets, and then maybe coming back down. And, there might be another fair value gap here, or we have a high here that could hold us as a mitigation block and send us higher. Right? We could just dip down below equilibrium, maybe back into this fair value gap if it's still open, maybe back down into this fair value gap and see which one of those want to hold us. And then again, I think we're going higher from there. So the structure on this on the 4-hour chart looks really nice. I mean, it does have some great structure to it. You got high, back to equilibrium, high, back to equilibrium, right? We're looking for high, back to equilibrium. And we could just continue to do that, go back and forth, never really going back down into discount. Because technically on a larger scale, if you were to take like this swing high here to this swing low, we're only right back like right into premium price on that swing. And then if you were to do it even deeper up here, we are, again, not quite back to equilibrium. So depending on what time frame you're looking at, we're watching for a return. I mean, this wick here hit nearly perfectly back to equilibrium. So that could have been where we catch a reversal and head back down to discount. If we were to head back down to discount, we could potentially go for lower lows. So I don't necessarily think that's going to happen. I think we're going higher on the longer term. But that's kind of two different things we're watching for. But it is likely that when you go from premium to discount, that you do see a return at least back to equilibrium, if not further. Again, from this high down here, equilibrium, but then we got our 61.8 and our 70.5. If we were to head higher, is going to put us in this range that we were looking at here, put us back into this premium from this move as well. So a lot of different things we're looking at as far as that goes, but just wanted to show you guys a little bit different take on some charts using this Fibonacci tool with the premium discount ranges, and then showing you guys just these fair value gaps that have been laying on the 4-hour chart. So let's drop down into the 1 hour. I got another different look. I got some range filters with momentum candles on there. So you can see on the 1 hour chart, we had that magnificent move up, from basically 205 all the way to 246, pretty much a $40 move. Just boom, all momentum candles. White, when they turn to white, that's bullish momentum. When they turn to dark blue, that's bearish momentum. The light blue is the in between, using the range filter. And so we caught that magnificent move. We caught a move down. We started to get bearish momentum candles. We got stopped by that fair value gap on the 1 hour chart, right? From this buy side imbalance, sell side inefficiency. We came back down. We tested it again. We ran off there. We've said we had another breakout candle on the 1 hour chart. We're back into white candles. Okay. If we want to see a bearish move, we need to turn these white candles back to blue, back to dark blue. And then we're coming back down for the sell side low here of 226, and then potentially even lower at 220.96 and 213.86. These are some fib levels. This is using the high of last week down to the low of last Friday, and then the move up today, closing below the 70.5 or the optimal trade entry. Caught even a little bit more. Now, what I want to see, or what I'm really closely watching for, is going into tomorrow. Does price want to rally off this fair value gap right around the 239 range? Do we want to catch a bounce? You see my arrows here. We catch a bounce, we might be heading to take out that high. We got those resistance lines. We got our volume node points of control. We got our support line. Got a lot of different things going on in the upward direction. Okay, if we take out that fair value gap, take it out, close 1 hour candles below it, we're going to take out sell side liquidity here, and then I talked about the Fibonacci targets on the way down. But there's a good chance that if we were to do that, we'd get stopped by the support trend line, at least at first. So I don't really think we're going to get that full symmetrical swing all the way back down to 206.14, which would be the sell side target of here. That would be a complete breakdown of the bullish channel. I don't think that's going to happen. But I do think that if we were to take out this fair value gap, we'd come back down, take out the internal liquidity. We'd get caught on this fair value gap. If we could take it out, we'd be targeting the low from last Friday. And then the last chart I want to look at is the 1 minute. What I wanted to point out to this, and I called this trade out completely in the Discord, but this was the silver bullet setup on the AM time period. And as you see, leading into the silver bullet, we're reaching for liquidity. Okay, we have a liquidity level here at 243.42. I saw that on the 1 minute chart heading in through the silver bullet, right? We're 7-8 minutes into the silver bullet. We're just watching for the setup. This is a ICT Smart Money Concepts setup, the silver bullet time macro on the AM, New York AM session. Okay, we reach for a high. Okay, we come back down. We break that low. Okay, I'm going to annotate it right here on the chart directly for you guys. Okay, we take that low here, and we come down. We set a low. We trade back up, right? Just barely over and through optimal trade entry. Okay, so we'll mark it off there. Optimal trade entry. Okay, and I called the optimal trade entry out live in the room. So if you caught the trade, awesome. I didn't take the trade. I was too busy charting it in live time for the members in the Discord. But if you caught it, awesome. So optimal trade entry, right? Our very first target is going to be the zero Fibonacci. So that's going to be price target 1. Okay, right here, and we hit it right there. Okay, then something I want to note here is that we have our low here, and then we trade back up to it, right? We traded down through it, but then we trade back up to it, and right here is a mitigation block. Okay, in that block right there, that 1023 block, that's a mitigation block. It traded up through this low here, and it rejected. It closed below it, and then from there we dumped down. We took our take profit 2. So our profit target 2. Okay, and then very quickly we take our profit target 3. And then also, again, very rapidly, we take our profit target 4. Okay, now it doesn't always set up like that. It's not always perfect as far as is it going to be a optimal trade entry or is it going to be a fair value gap entry. But what you're watching for is for a draw on liquidity to happen first, and that could be, in this case, it was very clean. It was a run on a high, and that was very obvious. It's not always so obvious, but we're looking for a liquidity target to be taken. And then we're looking for a run in the opposite direction. And so this one was a really nice one. Again, I called it out in the rooms in Discord. If you need more information on the silver bullet setup, let me know. I can point you in the right direction. I can also teach you some other things about, things to look at during the silver bullet time macro. But best to get the information directly from the source. Inner Circle Trader on YouTube has videos specifically on the silver bullet setups. So recommend watching that if you don't. But if you caught it perfectly or near perfectly, you got 243 entry. And if you were taking a 245 or a 242.50 on the put contracts, then you caught a ride down to 240. So basically a $3 move on the stock, which would have been a nice little payday as far as your options contract go. Would have probably been like 30 to 50%. So it would have been a nice move if you caught that. There would have still been plenty of time, so the premium would have still been good for that contract specifically. So we'll be watching and see if we can catch more of these silver bullet setups that I can provide for the members in the Discord. And I hope this has been helpful. Catch you guys on the next one. Again, don't forget to smash like, subscribe, share with all your friends. Thank you for the support, and we'll talk to you later.